What is going on, guys? Luke here today, and all the talk this week has centered around inflation, how the Fed will respond because they are seemingly in a lose-lose situation because the interest payments alone are just crazy as they continue to crank up rates, and more importantly, what will happen with stocks because of all of this, because it's obvious the Fed is actively trying to crash the market. I mean, Jay Powell said there would be pain, and he was not messing around at all. But my concern is actually greater than that, as there is actually a hidden danger with all of this that absolutely nobody is discussing at all, and I honestly don't know why, but we are going to discuss it today and the strategies to handle it. I just ask in exchange for you to gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. So does this market have you up at night worried? I mean, do you ever think about selling because you just don't know what else to do in this crazy market? And maybe the wild swings and noise has you checking your phone all day, waiting on the latest news or drop or run in the stocks that you own. If just one of those sounds familiar, there is good news. You can sleep like a baby and not have a worry in the world if you take advantage of the mega, ultra, super sale that ends next weekend to join the Market Insiders private group, where you get full and direct access to me and a group of 6- and 7-figure investors, and you get access to 5 courses for free. Yes, we added another course to that teach you how to plan, do evaluation, build up your cash, and how to buy real estate. And you get to see my watch list with price targets, my buy and sell alerts. We got live weekly Q&As, exclusive videos, and a ton more. So check out the pinned comment if you want all that before the sale ends forever. All right, so looking at inflation, it is still a runaway freight train at this point. I mean, we are over 8%, and despite energy prices basically falling off a cliff, we still can't seem to get it down by any appreciable measure. The Fed has aggressively raised, and yet they can't get it moving in the right direction, it seems. And the Fed has said it will continue rate hikes until they see inflation back down to the normal, which is around 2 to 2.5%, so a long way from that 8%. I think everyone could agree they should have started way earlier, but placing the blame and playing Monday morning armchair quarterback is completely useless now that we're in the middle of this. It is not going to help us understand the current situation we are in, and more importantly, how the market will react.
But Luke, just sell and hold cash while everything crashes and burns, and then buy it at the bottom. That's how this works.
That's actually not true at all. Holding cash during high inflation is a losing bet, period. And also, you're never going to time that bottom perfectly, so that's also a losing strategy trying to time the market. Let's say inflation goes to 12%, 15%, or 20%, whatever number you want to put out there. Do you think the banks are going to give you 12%, 15%, 20% on your savings? The answer is no. 3% would be enough to get all the capital they need, and they get to keep the difference too. So if that isn't the right answer, then what is the right answer actually? And what is going to happen with the stock market if the Fed stays really aggressive like they have been? I mean, Jay Powell has used Paul Volcker's name in describing his resolve to tame inflation, and we all know what that means. That means crazy high interest rates. The good news is we have been in that exact situation before, and that is the Paul Volcker situation he is referring to is exactly the same situation we're in now. In 1980, we had inflation way worse than right now at almost 15%, and the Fed took the unprecedented stance of shooting interest rates way up to levels not seen before or since. Some of you may be old enough or remember hearing your parents talk about getting a mortgage for like 12 or 15% and that being a good mortgage rate. I mean, we got everybody freaking out right now about 5 and 6%. Imagine that, 12 or 15% for a mortgage. But the strategy employed by the Fed actually worked and inflation came back under control. Paul Volcker was the Fed chairman, and from the time he took office in late 1979 until 1981, he raised rates to a peak of just over 20% in 1981, and then kind of slowly eased off the gas until the US came out of the recession in 1983. Let me say it again, 20% interest rates during a recession. So looking at today's market, just the threat of a 3/4 point increase that the Fed actually said, well, they were actually going to do in the first place, kind of spooks the market and sends it plummeting. So imagine what the market will do if the current Fed stays aggressive, maybe not 20% aggressive, but stays aggressive into 2023, since we are technically in the same situation with being in a recession and needing to continue to raise rates. I mean, the stock market's going to tank, right? I mean, the end is here, and even though cash loses money during high inflation times, it's better than losing all your money in stocks, right? That right there is the hidden danger in my eyes, because the data shows the exact opposite is true. I know it's hard to believe, but let's look at the actual facts of what went on back then. The stock market returns between 1979 and 1983, when inflation was last this high and completely out of control, and we were in a recession, Paul Volcker implemented his strategy of super aggressive rate hikes, and the S&P had the following returns to show. In 1979, it returned 12.3% when he started, and then in 1980, it was a return of 25.7%, and then in 1981, it was down to 9.73%, down, but not horribly down, but then it was right back up to 14.7% in 1982, and rounding out the period, it was up 17.2% in 1983, and the rest of the decade returned extremely well and obviously outperformed any other investment during that time. So the last time we had real inflation like we have now, and the Fed raised rates aggressively to combat that inflation, just like they're doing now, and we had a recession in the economy during that time frame, the stock market was wildly positive 4 out of the 5 years, and the only people who lost money were those who didn't invest and just held cash or that listened to all the noise or all that other garbage stuff like that. Those that invested made a ton of money over that time frame. If you listen to the media narrative and the fear and the political BS and all the YouTube drama, you are going to miss a golden opportunity, and that is the hidden danger with what is going on right now. And let me give you some more truths for those that want to try and give me the 25 reasons why this time it's different, even though that has been a losing strategy for over 40 years as well. The truth is, the only way to keep up with high inflation is to invest. And the best time to invest is during uncertain times like right now, where everyone is dumping stocks and everything is on a discount. If you went to the store and the new iPhone or a new Tesla was 50% off, would you not be buying them like crazy? I mean, absolutely you would be, and then probably selling a lot of them on eBay, to be honest, after that probably. And if 50% off isn't good enough, what about 70% or 80% off? You are buying those, no doubt about it, and those are depreciating items that will not be worth more in the future no matter what you do. The moment you drive it off the lot or put that new phone in your pocket, it goes down in value, and every day forward, it will get less and less valuable. Today, if I give you shares of Apple at $85, you would probably jump all over it. But if Apple does actually fall to there, will you actually pull the trigger when that time comes, when it actually falls to that level? Now, some will, I agree, but most will not if it actually happened. And I know that because we just saw this with Tesla. I mean, Tesla stock went down to $209 from its all-time high of $414, so almost 50% off. And I know some of you guys were buying out there, but many of you were not buying. That is despite the fact that it almost certainly will be worth more in 3 years than you bought it at back then in June or even today, unlike the new iPhone that many people happily upgrade to or that new car that you buy. And don't argue with me, the numbers show that when an asset like a stock that appreciates in value over time goes on sale, most people actually run from it. And then when it gets overvalued and at all-time highs, everyone is in line to buy it. Or basically buy high, sell low, and I wish this meme was a joke, but it actually is not a joke at all. This is the best time to buy assets and not try to look genius now or next month or time the bottom or whatever the heck everybody else is doing and a lot of people on TV and YouTube are doing and anything else like that. But look genius in 5 years when people look back and call you lucky for having invested during this time. Let me give you a quick example of this. I mean, I bought Apple for like 30 cents a share. Now, it's split adjusted. It wasn't actually 30 cents a share back then, but split adjusted, it was 30 cents per share back in 2002, and I actually missed the bottom by 40%. Does it matter now? Well, I'm very happy with my buys and don't care that I didn't time the bottom in 2002, or honestly in 2009, or even 2020, and I won't time it this time either, and neither can anyone else in the end. So I will continue to buy based on valuation and not timing the market or trading in and out of positions or any of the other strategies that are pitched that actually statistically fare far worse than just buying the dip. And if you're afraid to buy the dip because you don't know how to do a valuation or how to create a plan or how to keep your emotions in check, and you want 5 free courses and direct access to me to help and a ton of other resources, make sure you don't miss the Mega Deca Super Sale that's going on right now for the Market Insiders private group that is expiring next weekend. And click this video here for the stocks I'm still buying in this market, and click here for exactly what I'm doing to make huge money in this market. So thanks for watching, and we'll see you in the next one.